In this video, we're going to continue where we left off and talk about normal balance. Okay, so to recap, we started with the simple accounting equation. We expanded that into the expanded accounting equation. We said that these items on the expanded accounting equation are really account types. Each one of these account types have accounts that are linked to it. The account types have T's, right? T can be applied to accounts or can be applied to account types. And the left side of the T is debit, as you'll see across. The right side of the T is credit. However, depending on the account type, if you debit the account, it may increase it. If you credit the account, it may decrease it. So for assets, if you want to increase an asset, you're going to debit it or put it on the left side. If you want to decrease an asset, you'll credit it, put it on the right side. But for liabilities, if you want to increase a liability, you would credit it on the right side and you would debit it on the left side. So that's sort of what we went through. Now we're going to introduce this concept on page 2 of this handout, which is the normal balance. So here is what normal balance means, and this is a definition term you need to become familiar with. Normal balance is the side of the T account that causes the account to increase. So you'll see here, assets, you increase with a debit, the normal balance is a debit. Expenses, you increase with a debit, the normal balance is a debit. Dividends, you increase with a debit, the normal balance is a debit. Liabilities, you increase with a credit, the normal balance is a credit. Revenues, you increase with a credit, the normal balance is a credit. And common stock, you increase with a credit, the normal balance is a credit. So basically, when we talk about the normal balance, it is wherever the arrow is pointing up, that is the normal balance of the account. And again, the normal balance for the account type is a debit, so all the asset accounts also have a normal balance of a debit, right? So liabilities accounts, a normal balance is a credit, so all of these accounts have a normal balance of a credit. The normal balance is the side of the T account, either the left side or the right side, that causes it to go up. So wherever the arrow is pointing up. So let's go ahead and use this information, okay? So, and it really, you can skip through this exercise, but I really think it'll help you to do the exercise. It'll help you understand how to use this information. So if I say to you, okay, what is the normal balance for cash? What would you do? You would first find cash. You would say cash is an asset. Then you would look up for the asset. And okay, the normal balance is a debit because it's on this side. If I say to you, what's the normal balance of land? First, you need to find land. Well, what is land? Land is down here. Land is an asset account. I come up to the asset account type. Assets, the normal balance is the side where it goes up. So that's land, it's a debit. If I say the normal balance for accounts payable, well, accounts payable is a liability. So what do? I go look for accounts payable. Accounts payable is part of a liability. The normal balance is a credit. If I say what's the normal balance for preferred stock? Well, preferred stock is over here in the common stock section, right? So what's the normal balance for preferred stock? Well, the normal preferred stock is part of common stock. Common stock is here, so the normal balance is a credit. What about the normal balance for sales revenue? So see if you can find that. If we go over here to revenue, here's sales revenue, right? So what do? I look for revenues. And what's the normal balance for revenues? It's a credit, so sales revenue is a credit. What's the normal balance for expense, amortization expense? Well, expenses are up here. The normal balance is a debit, all right? So that's pretty simple. So I could tell you the account, and once I pick the account, you can figure out the normal balance by matching it to the account type and doing that. Okay? Let's take this a step further. Instead of telling you the normal balance, I'm going to tell you whether an account is increasing or decreasing, and then you tell me the account type and whether you debit or credit it. Okay? So now here's the next step in the evolution. I'll tell you whether account is increasing or decreasing, and you tell me whether you debit or credit that account, right? And this is important. So again, when I say these, you may want to pause the video and see if you can figure it out yourself and then hear me do the answer, okay? So first, let's start with cash. Cash is increasing. Well, if cash is increasing, what do? I look for cash. Cash is an asset, right? Assets follow this rule. If I'm increasing an asset, what do? I debit the asset. Okay, very good. How about equipment is decreasing? So I come down to equipment. Equipment is an asset, right? And if equipment is decreasing, then what do I do to assets when it's decreasing? I would credit equipment because it's decreasing. Okay, so you start to see it. What about copyrights? Still an asset. Copyright is an asset. Copyright is increasing. So I look for copyright. Copyright is up here on the asset. If it's increasing, I'm going to debit it. Okay, what about interest payable? Anytime you see the word payable, that's a liability. Interest payable is decreasing. Okay, so I find interest payable. Interest payable belongs to liabilities. If it's decreasing, that means I'm going to debit interest payable. And this is what you have to be able to do. Identify whether the account is going up or down and figure out whether you debit or credit. So what about preferred stock? Preferred stock is increasing. So preferred stock is part of common stock. I go up to the account type, common stock. If it's increasing, I credit preferred stock. Okay, gains are increasing. Well, what is gains? Gains is over here in revenue. And I see gains here, right? So I go up to the revenue account. If it's increasing, I'm going to credit gains. What about rent expense? Well, rent expense, let's say, is decreasing. So I'm going to go to the expense section and find rent expense. Rent expense is part of expense. How do we decrease an expense? We credit, so I'm going to credit rent expense. Okay? Now, this is an interesting one. Accumulated depreciation is increasing. So we look for accumulated depreciation. Here's accumulated depreciation. Accumulated depreciation is an asset. And so normally if an asset is increasing, what do? We debit it. So you would say you debit accumulated depreciation, and that would actually be wrong. So in this case, accumulated depreciation isn't increasing. You wouldn't debit it, you would credit it. Now you're confused. You'd say, why, Okara? Well, you see accumulated depreciation has these two stars next to it. And so you see the two stars here. It says these are contra accounts. This means that the normal balance of these accounts are opposite the account type. So anytime you have a contra account, it is the opposite of the account type. And the contra accounts I've highlighted for you in bold. So allowance for doubtful accounts, accumulated depreciation, discounts and bonds payable, treasury stock, sales discounts, sales returns and allowances. These are contra accounts. And so they follow the opposite of the account type. So let's do that again. So accumulated depreciation is increasing. Normally, for a regular asset, when you increase it, you would debit it. But because it's a contra account, you flip it, so you increase on the credit side. Again, a contra account is just the opposite of whatever the regular rule is. So if the regular rule says we increase with a debit, for a contra account, we're going to increase with a credit. Okay, let's try a few more. Discounts on bonds payable is decreasing. Try that. Pause the video and try that. Discounts on bonds payable is decreasing. So discounts on bonds payable we know is a contra account. So let's go up here. If it's your regular liability account, we decrease with a debit. So normal liabilities, we decrease with a debit. But this is a contra, so what would we decrease with? You would decrease with a credit. So you would credit discounts on bonds payable. Let's look at treasury stock. Treasury stock is increasing. So treasury stock is a contra account. So treasury stock belongs to common stock. If it was a regular common stock account, we would credit it. But because it's a contra account, what would we do? You would debit it. Okay, sales discounts are decreasing. So let's go to revenues. If anything is decreasing in revenues, we would debit it. But since sales discounts is a contra account, how do we decrease it? We do the opposite of the debit, which is a credit. Okay, so remember that. The two things you need to get out of this is one, identify the normal balance of an account. I should be able to say any account, and you should be able to use this to figure out the normal balance. I should also be able to tell you an account is increasing or decreasing, and then you should be able to tell me whether you're going to debit that account or credit that account. That is very, very important, especially for when we do journal entries.